Hi everyone, welcome to today's video. So on today's video, I'm going to speak about how to identify multi-baggers and I will suggest a very specific framework for that. Super critical video, super important video, and in order to illustrate my case, I'm going to deep dive into my portfolio and I'm going to pick one controversial stock that I had spoken about earlier, roughly 2.5 months back. I'm sitting on massive profits on that controversial stock. So I'm going to deep dive into it, help you understand the framework as to why I had purchased that stock. Then, more importantly, I'm going to pick that same framework and help you identify 3 multi-bagger investment opportunities. So that's the agenda for today. And if you want to make this channel a multi-bagger investment channel, hit the like button. That helps us a lot in terms of spreading financial awareness, especially among retail investors. Also, do check the links in the description box for some of the investment opportunities that I have outlined through my small cases. So let's get the video started, and first and foremost, let me talk about the stock that I had purchased roughly 2.5-3 months back. The stock's name is JP Power, and you can see that I'm sitting on approximately 85% profit on it as I'm shooting this video on 6th of January. Now, when I made this video, a lot of people said, Akshat, you have gone crazy. You are purchasing like penny stocks. You know what? You are just misguiding retail investors, this, that. Okay, so I appreciate the viewpoint, but the idea behind purchasing that stock was very specific, and I want to outline the framework as to why I had purchased that stock. Now, before I jump into helping you understand the framework, let me quickly explain the concept of multi-bagger because it's very important for us to fundamentally understand what multi-bagger is. So essentially, whenever a stock can go up from X to let's say 3X or 4X, it is considered to be a multi-bagger. There is no set definition per se, but essentially it means that if you're buying something at 100 and it has the potential to 2x, 3x, 4x in size in a very quick span of time, that is potentially considered to be a multi-bagger. Now, any multi-bagger or majority of the multi-baggers will have these 3 key traits. One, they would start out with a very small base. For example, if you consider the example of Bajaj Finance, it's a great company, but when it started out and started giving out multi-bagger returns, it was a small company to begin with. Because now if you invest, for example, in HDFC Bank or HUL, they are great stocks, they are cash flow rich stocks, and they are going to give you good returns, but it's very unlikely that they are going to give you multi-bagger returns. Why is that? Because the market cap of companies like HUL or HDFC Bank is already too big. So it's very difficult for them to grow 2x or 3x in size. So this is the first key concept. The second key trait of a multi-bagger is that opportunity will look a little bit risky. Now let me explain this by using a simple example. So let's pick the example of NFT market right now. Now everyone is saying right now, almost if you go and speak and have a conversation with 100 people, everyone, almost 95% people will tell you that, you know what, NFT is a fad, it will go away, there is just no value in NFTs, and no one will be betting on NFTs right now, or a very few people would be betting on NFTs. Now, I'm not saying that go and invest, but please hear out the argument that the point is that in the NFT game, you have almost 95% people who are against the NFT market and probably 5% people who are supporting the NFT market or are believers in NFT. So something like NFT has a higher chance of becoming a multi-bagger because people will shift from this bucket to this bucket. People will start jumping ships as the NFT market gain prominence and if it gains prominence. So therefore, anything that you invest your money in, it has to be a somewhat of a hidden opportunity. If you're going after tried and tested stocks, those will give you returns. Those are good stocks to invest in and majority of your money should go into those type of stocks only. But you will not find multi-baggers. So which brings us to a third quick concept that a multi-bagger will be volatile, right? It will go up in price, it will go down in price, so on and so forth. Why? Because it takes time for 95% of these people to jump onto this boat. So that is the honest analysis of the traits of a multi-bagger. Now let me jump into JP Power and help you develop a framework for identifying multi-baggers. So here is JP Power and you can see that the market cap of a company is only 5,500 crore. So it's not a very big company to begin with. So the size of the company is small. So it has potential to go up. This is the first key thing. Now the second key reason why I felt that something like JP Power can give a lot of return was very simple, that it was an undervalued opportunity. Now let me explain that by taking you to a graph. So I started purchasing JP Power somewhere here at approximately 4.2 levels. Now why did I do that? If you take a look at the 5-year graph, you will see that it was deeply undervalued, right? I mean, you can see that this stock was barely moving. Now you would say, Akshat, this sounds like fascinating. By this logic, we can just go and invest our money in any random stock where the prices have fallen. No, that will be senseless buying. Which brings me to the third point, that whenever you are purchasing an undervalued asset, you must have an investment thesis, right? This is the most important part because this helps you differentiate between actual useful opportunities and opportunities that are pretty much pointless. Now, what do I mean by having some kind of investment thesis? Okay, so let me explain that by taking you to the balance sheet of JP Power. Here you will see is that borrowings for JP Power had been going up and up and up till 2019. Right? So you can clearly see that the borrowings were up, and from 2020 onwards, it started repaying a lot of the borrowed amount, and its borrowing came down significantly, right? It's just not a small drop. They have cut down their borrowings by roughly 75%, which is like a huge dip in borrowing. Now, what is the nature of a company like JP Power? So JP Power essentially produces electricity and they sell it off. That is the basic business model. Now, what happens with these type of utility companies? Now, in utilities companies, if the debt is very high, then a lot of the money that they are making goes in terms of paying interest. For example, and let me explain it to you in a very simple language. So let's say that JP Power, the revenues that it made in a particular year was 100 rupees. Now it would have certain kind of expenses, right? So there will be cost associated in terms of generating this electricity. So let's assume that they spend 90 rupees to generate these revenues. So the profit becomes 10 rupees. Now what happens is that if the borrowings are high, then you have to repay interest, right? Interest. For example, when you go take a loan from a bank, then you have to repay principal plus interest on it, right? So yes, here JP Power was still profitable firm, but it was repaying a lot of amount in terms of interest. So therefore, its financial performance was really, really weak. And why was the financial performance weak? Because its borrowings were very, very high to begin with. So it started working on a fundamental issue that was plaguing the firm, and that was depleting the performance of the company. And you could have easily figured out by looking at the borrowings tab of JP Power that borrowings were high till like 2019. So I did not even invest 1 rupee in JP Power till 2019, till the time borrowings were going up. Then the borrowing started coming down, and borrowing started coming down consistently despite the pandemic, despite suppression in demand, despite a bunch of different things. Now, if you read further about JP Power, you will realize that they sold some of their inventory, they lightened their assets, and bunch of other good things that were happening with the firm. So from that perspective, from 2020 onwards, our investment thesis in JP Power changed. Now the investment thesis was that, okay, this company knows how to generate profits. It was struggling because of very high debts. It has started reducing that debt, and it will become even more profitable going forward. Therefore, there was a lot of interest from investors like me who started in JP Power here. So you can see all this volume accumulating here. And resultantly, now JP Power has become a rocket. Now, can it fall? Of course it can fall. I'm not saying that, it will forever keep on going up. But even now, it is a deeply discounted asset from that particular perspective. Now, is it a buying or selling recommendation? No, it's no recommendation at all. Please act as per your understanding. I'm just telling you honestly whatever I'm doing in the market. If you like it, please press the like button. So now let me systematically explain you the framework in a minute. And then I will explain 3 multi-bagger assets that I feel will become really big going forward. So the framework is fairly simple. If you look at the JP Power story, number one thing is that the asset should be undervalued, right? It should be deeply discounted, or it could be a newer asset. For example, if some company that has gotten recently listed, or just a few years ago it has gotten listed. So it should be new or undervalued. This is the first key trait that I look for. Second is that there will be a certain level of risk associated with that asset. And from that particular perspective, these videos are not a stock buying, selling recommendation. I'm just honestly telling you whatever I'm doing. And there will be a bunch of assets where my bets can go wrong, like any other investor's bet. But I only need to be correct almost 30-40% of the time to make insane amount of money in the stock market. Okay. Third thing, your investment thesis, whatever investment thesis you believe, it needs to play out. For example, in JP Power's case, the investment thesis that I had was that, hey, repaying its debt on the right track, and this will benefit the firm. And that is precisely what ended up happening. And that is the reason why so many investors got attracted to JP Power. Now, with this lens, let us start analyzing 3 key investment opportunities. The first key opportunity that I will speak about is called as NMDC. So I'll give a very quick overview of the company and I'll walk you through that framework. So NMDC is engaged in the exploration and production of iron ore, along with diamond production of sale of sponge iron, generation and sale of wind power, etc., etc. So basically what it does is that majority of NMDC's revenue comes from selling iron ore. Now, iron ore is widely applicable in industries, any type of industry. Iron ore is one of the key ingredients to support any industry. So if a nation is undertaking industrial growth or if the industrial demand increases, then something like NMDC is likely to benefit from it. Now let me quickly cover some of the major points about NMDC. So NMDC is the largest iron ore manufacturer in India, accounting for 18% of the total domestic production. So it's a monopoly in that sense. Another key point about NMDC that it is undertaking capacity expansion and it has been allocated 2 coal blocks also to extract iron ore. So good things are happening in this company, especially because of the fact that it is simply going to extract more iron ore. That's one. Second key investment thesis that I have in mind is that, hey, the industrial demand is picking up. That is going to happen as bull run accelerates. So now let us walk through our framework. Is this company really big in size? The answer is no, given what the company is doing, because you also need to keep in mind what the business of the company is. This company is not too big to begin with from a PSU's perspective. So that's one. Second key point, is there a value buying opportunity in this stock? So the answer to me seems like a yes, because if you check it from the top, the stock is available at roughly 35% discount. So from its peak, it has fallen by 35%. Also, let us try to understand whether this fall is justified or not. So you tell me, right? For example, start looking at the data from 2016 onwards. The sales have gone up, no problem, right? Profits have gone up, no problem. Company taking expansion and will be expanding further, no problem. Will the profit margins reduce? No, because it's a commodity driven product. For example, when you're selling iron ore or when you're selling steel, you're not selling like any product per se. You don't need to market it. You're just literally selling raw material, right? So the profit margins are minimal, so to say, but those profit margins will stay consistent. And finally, if you check the demand for industrial products in India, which can be verified by using the IIP data. Now, my colleague has started an economics related channel. So she will, on her channel, will talk about what exactly is IIP in a coming few days. So you can consider subscribing to her channel. She worked in Ministry of Finance, so she will be taking some of the economics concepts. So you will understand more about IIP through her. But to cut the long story short here, you can clearly see that even now the demand for industrial good is very, very suppressed. And this is going to come back. This is going to rebound at certain period in time. Whenever that happens, commodity stocks are going to become rocket. And from that particular perspective, I am investing in NMDC. Now, again, not a buying selling recommendation. Please act as per your analysis. Now, if you want, I'll make a separate video on commodity stocks. And again, I'll wait for like 20,000 likes on this video and then I'll make part 2 of commodity driven stocks. There are great buying opportunities in it. So press the like button and support this channel. Okay, so now comes the second investment opportunity. Okay, and please don't drop off when I say the word Bitcoin. Please don't drop off. Hear me out. It will hardly take 2-3 minutes and then I'll explain you another stock. Now, why am I bullish on Bitcoin? So again, let us run through the framework that I had established. So first and foremost, if you check the size of Bitcoin, you will see that right now that market cap is 816 billion. And at one point in time, it was in excess of $1 trillion, right? So clear 20-25% profit making opportunity here itself, right? That if Bitcoin goes up to its previous market size, then you stand to make 25% to begin with. That's one. Second key point, is Bitcoin undervalued right now? I would argue that yes, Bitcoin is fairly undervalued right now. It is down by roughly 38%, as you can see from the chart. So 38% Bitcoin is available at 38% low. Is it risky? Yes. Any investment is going to be risky. So what is the investment thesis that you should believe in order to invest in Bitcoin? Because of course, Bitcoin is a risky asset, but what is the investment thesis that we are looking at? So let us plot it out. So the first key investment thesis that you need to believe in order to invest in Bitcoin is that you need to ask yourself the question that will the entire crypto market 5 years from now or 3 years from now, will it go up or will it go down? Now I see literally two options here. Either the crypto market will go 100x or it will go to zero, right? There is no middle path here and you need to pick one narrative. I believe in the narrative that crypto market will go up. Now this does not mean that I'm selling my house and putting all my money in Bitcoin. No, I'm not a maximalist. I'm a very diversified person from that perspective. Now comes the second concept, that why do I think that the crypto market will go up? The answer is fairly simple, because we as humans tend to move on to better things. Now, we can argue all day long what the governments will do, what the governments will not do, but here are simple facts for you, right? For example, do you pay commissions when you are transferring money to the US, and are those commissions high? The answer is yes. When you buy real estate, are you paying insane amount of commissions? The answer is yes. When you do forex exchanges, are you paying insane amount of commissions? The answer is yes. Now, do these problems need to be solved? The answer is 100% yes, right? And people will pay money to solve these problems, and people will jump onto projects that are solving these problems for you. So therefore, crypto systematically solve these issues. Right now, that is the best available solution. If you disagree with me, comment below. I'm happy to read your comments around what is a better solution than crypto to solve these problems that I've raised, right? So crypto market has a lot of application. Now, I'm not saying that every crypto coin will grow, right? Which brings us to the second part of our investment thesis, that why do I feel that Bitcoin will go up? For the simple fact that Bitcoin is an alpha coin. It was literally the first coin that started gaining traction, and it acts as an indicator to the growth of the crypto market. Every time the crypto market has come up or has come down, Bitcoin is literally like an index, so to say, right? Without Bitcoin moving up or down, the crypto market does not move up or down. So if crypto is going up, then Bitcoin will go up too. Now, more nuanced perspective around that would be that it is almost impossible to replace or kill Bitcoin with another cryptocurrency similar to Bitcoin. Why is that? Because Bitcoin has established its hegemony. So word of the day is hegemony. Hegemony simply means superiority. So Bitcoin has established its superiority as a store of value, right? I have made several videos. Please help me understand in the comment box, and please help others understand what do I mean by store of value and why is Bitcoin a better store of value compared to cash. So if you have been listening to this channel or any of my commentary, or if you have read my articles on newspapers, etc., you would understand this concept really well. So please explain it for the benefit of others also. So it's a great store of value. No one is coming close to Bitcoin in terms of store of value. And therefore, all these three investment theses is something that I believe in. I can be wrong. I'm not saying that I'll 100% be right, but this is the thoughtful narrative in which I believe. I do not believe in the argument that governments will put blanket bans forever. That is impossible to do. They might ban temporarily. They might institute partial bans. All that stuff might happen. But to cut the long story short, I see this narrative playing out, and this is my investment thesis, and I'm taking an investment on Bitcoin from that particular perspective. So this brings us to the third and final asset, or third and final multi-bagger, which is AU Small Finance Bank. Okay, so why am I bullish about this? So first and foremost, I believe that AU Finance Bank has a lot of steam left in terms of its growth. So if you take a look at the numbers from 2018 onwards, and you will be surprised to see that it is doubling every single year, which is massive growth from that particular perspective. Are they growing profitably? Yes, they are growing very, very profitably. There is absolutely no trouble there. Is it available at a discount? So I would argue yes. The stock is down by roughly 16% from its peak. Now, why do I believe in the concept of peak for a bank like AU Small Finance? The reason is fairly simple, that the company is making its highest ever profits and revenues, and it is not trading at its highest ever price. So it will go back to its previous high. That is almost given. It should definitely happen by the next quarter itself, most likely. So 15-16% to be made there directly. Now comes the investment thesis part for a company like AU Small Finance. AU Small Finance. So if you take a look at AU Small Finance loan breakup, you will see that almost 30% of the loans are being given in non-priority sector, and 70% of the loans are given in priority sector lending. Also, there was a statement by the management of AU Small Finance Bank, and I'm pasting the screenshot here so you can read it. They are going to focus a lot on the housing portfolio, especially in rural and semi-urban areas. Now, this is really, really big. Why? Because there are 2-3 trends at play. So this brings me to the investment thesis of AU Small Finance, and there are 3 things at play. Number one, you might have heard that a lot of investors are getting attracted to the real estate sector in India. For example, a few days back, I spoke about the fact that India Bulls Housing Finance is getting a lot of traction. A lot of investors are getting attracted towards that stock. Why? Because the realty sector in India has been deeply beaten down since COVID, and now it has started to come back up. So therefore, this housing narrative is going to go up, and companies like AU Small Finance, India Bulls Housing Finance, they are going to benefit from it. This is the first key point. Second key point, the firm's focus has been rural. As I showed you from the screenshot also, the firm is deliberately trying to ramp up its loan portfolio in semi-urban rural housing sector, which is a very profitable portfolio for something like AU Small Finance Bank. And guess what? India's Housing for All mission is also gaining quite a lot of steam because it was put on hold a little bit during COVID, and the targets will be pushed very, very high. So where do you think that people are going to take loans from? So most likely they are going to explore options like AU Small Finance. And third and finally, the company has become a lot more profitable now. They are going to redeploy that money with focus on their housing loan portfolio. So this is a theme that I'm able to uncover. So this is the reason why I'm an investor in AU Small Finance Bank also. So just to recap the entire video, in order to find multi-baggers, you have to take calculated risks. You have to build an investment thesis and take bets accordingly. One key thing that I do whenever I'm investing in these type of multi-baggers or slightly risky stock is that I take hedging positions elsewhere. For example, it would be futures and option market or buying some defensive stocks. I don't talk a lot about FNO on this channel because it is super dangerous for retail investors to get into that game. But if there is enough interest, I'll start teaching that also, not an issue. So let me know and press the like button, and I will see you the next time.